then. Let's come on to banking. And first of all, I just wanted to highlight this from the Dutch government. We'll again do a quick translation of it. And this is about cash payments. Now, in fact, the issue of cash payments in Holland has been something, I think this page was originally published in 2022, in October or so, but it was updated in the last couple of days to highlight the fact that there's now a bill going through Parliament. So if we just have a look at this, they were saying that at this time you may pay for all purchases in cash. For cash purchases above 10,000 euros, the seller must conduct a customer due diligence, but not all sellers accept cash. The Cabinet is working on a bill to ban cash payments above 3,000 euros. And that's basically it. So this is the bill. Now, it has been, it was initially laid before Parliament in October 2022, but it's now starting to make progress. And it is sponsored by the Finance Minister in the Netherlands. So this is a further attempt to restrict the use of cash in another European country. The 3,000 euros is not the worst case. Spain and Italy, I think, are around the 1,000 euro mark. So there are other countries in Europe that have lower levels than this, but we see the direction of travel.
Yeah, the thing which is interesting for me, Mike, is that this is policy which is coming up across national borders. It's happening in UK, it's happening in European countries, and therefore the policies that the banks are enacting has to come from some central position. I think that's an easy win. There's something going on. The policy is setting across the borders of nation states. So I wanted to just take a little bit of a look at the banking industry. And first of all, I wanted to draw our viewers' attentions back to two interviews that I did with a gentleman called Trevor Kitchen. This was the first one, Forex and Banking Fraud. And this was essentially about his experiences having identified what he regarded as fraud in the exchange rate and the position of the Swiss franc. This is a gentleman, you can actually see his picture on screen. As a result of him reporting wrongdoing to the authorities, he was absolutely vilified and hounded, and he experienced firsthand the power of the European and the dangers of the European Arrest Warrant. So if you haven't listened to either of those two interviews, perhaps you might like to do that. But Trevor was kind enough to send me an email with regard to this article. So from US News, regulators review of over 30 Swiss banks find shortcomings in money laundering controls. And if we get into some of the text, at least, it's pretty simple. It's the fact that there's been an in-depth review of more than 30 banks, and that review has found that a large number failed to meet basic requirements for analysing the risk of money laundering. So this was a particularly interesting article on the back of the fact that we've had Trevor Kitchen giving his experiences, which is when he reported wrongdoing in the banks to the authorities, nothing happened to the banks, but he was put under intense pressure. So what can we say? Well, the first thing that I thought about this particular article was that does shortcomings, is that the new term for criminal corruption? I'm not sure, but that was the headline, that they'd found some shortcomings in the banks. So I thought we'd take a little journey through the Financial Conduct Authority, and here's part of their information. This is dealing with 2021. The total amount of fines on banks so far is 567 million. Thank you, Mike. The figures floating a bit there, 567 million. And they mentioned National Westminster Bank, but let's have a look through some of the detail. HSBC, we've got 64 million effectively. NatWest is mentioned again, 264. These are all fines for offences, money laundering or breaking the rules. On it goes, Credit Suisse, 147 million. Lloyds Bank, 90.6 million. And another Lloyds Bank, 64, Goldman Sachs, 48 million, Standard Chartered Bank, 102 million, Bank of Scotland, 45 million. What do I think we're seeing here? We're seeing systematic or systemic corruption in the banking system. But all that seems to happen is that fines, which are relatively small for the overall assets of the bank, are placed. So alongside this, we've got the situation with gold. Now, I've taken the comment from the Royal Mint, but just if people are not sure about it, this is about the fixing or establishing the gold price. And it gives an explanation as to why gold fixing is used. But if I just have a look at a bit of the text here, put simply, the gold fix is a pricing mechanism which is in action throughout the day. It arrives at a value based on the buying and selling movement within the marketplace on a particular day. The London Bullion market is the international home of gold pricing. And down here, it makes the claim that to all intents and purposes, gold remains the original and most widespread global currency, carrying what it describes as monetary value throughout the world. Well, I think there's a bit of debate to be had about that, but we'll leave that for another day. Let's just have a look at how it says decisions are reached and why does the price of gold fluctuate. So the bit that caught my attention in how decisions is reached is that it says currently 12 outside participants have accreditation to contribute to the gold price, the LBMA gold price, including Barclays Bank, Goldman Sachs, HSBC and JP Morgan. So as a lay person, it just seemed to me rather strange that banks, which are clearly demonstrating their inability to deal with fraud inside their own banks, are then used to sit effectively on a committee to help fix the price of gold. But it also says that the World Gold Council, which claims 60% of the world gold reserves are held amongst just 5 national governments. It says that central banks are significant buyers of the gold in the gold market, so their buying and selling patterns are carefully watched. So we now got the interesting situation. The circle goes round because we've also got the central banks helping to fix the price of gold from which they benefit. But here we've got more on the market itself, and it's talking about when the prices are set and who administers them. Let's have a listen to this little video clip where the bullion market is talking about itself.
The LBMA is the world's authority for precious metals. We are the standard-setting organization that defines how precious metals are refined as well as traded around the world. It's our job to ensure the quality and the integrity of the metal itself, as well as the market participants.
Our members are leading firms involved in the full life cycle of precious metals, from being mined, from rock in the ground, being refined, being transported, being stored, and then finally being sold, whether as a bar or as a piece of jewellery. These miners, refiners, banks, trading houses, ETF providers, security companies, vaults, even central banks must follow LBMA standards for the benefit of customers around the world.
Our board has an independent chairman as well as non-executive directors, which ensure the independence of the governance of the LBMA. But there are also elected market directors who sit on the board and ensure the market is steering the development of the association. Beyond that, we have many subcommittees and working groups in which market participants can be engaged in steering everything that LBMA does.
We provide quality control for the metal produced, and we set high standards for business conduct. And we're also the voice of the market for governments, regulators and investors.
We do that through the Good Delivery List and the Global Precious Metals Code. The Good Delivery List defines what's acceptable when it comes to the appearance and the shape of the bars themselves. It's also considered the de facto international standard for gold and silver. The Global Precious Metals Code is a code of conduct which promotes a fair, effective, and transparent market. It provides market participants with principles and guidance to uphold high standards of business conduct. All of this creates confidence in the market for all participants. We work closely with the commercial vaults as well as the Bank of England, and the vaults only accept bars which meet the good delivery standards. They also physically inspect each bar as it comes through the door to make sure that it's up to standard. As such, they act as the gatekeepers of the market.
We're also leading the world in responsible sourcing, thanks to the strength of our responsible sourcing program.
Our aim is to maintain integrity as well as proactively develop the precious metals market. That means we're always looking forward and anticipating any future needs and requirements.
So, just my opinion on this, we've got banks that can't deal with the corruption inside the banks and the money laundering. They're huge concerned about that, working alongside and in the very organisations that are working to create independence or independence of governance over gold. They're giving a voice to the marketplace, including the regulators, and we should have confidence in what's happening here. Well, I'm going to suggest I don't have much confidence. Let's look at the World Gold Council, because that was also mentioned just now. Now, this was established by some of the world's, quote, world's most forward-thinking mining companies. But if we go on through, it says that they are providing a central banks program, providing authoritative research, statistical data, and all of this is going through to engage bilaterally with the central banks and official sector investors. So this is a wheel within a wheel, but we should believe that those mining companies are working in partnership with the banks, who we've already seen have got massive problems with the corruption. And if we have a look at some of the governance issues, this is the gentleman who is the chief executive, David Tate. Now, we're not suggesting that he has done anything wrong in any way, but it's very interesting to see that he's worked as the global head of fixed income macro products at Credit Suisse. And he's also had a career with Goldman Sachs. So we've got people moving through the banking system in and out of the organisations which are working to control the gold price. And if we add a bit more to the mix, we're back on the currency situation. And we've got this Reuters report from December the 6th, 2022, a mere 80 trillion, what they described as a blind spot. The Bank of England is concerned because there's a 80 trillion hole. Let's have a look at some of the comments. Pension funds and other non-bank financial firms have more than 80 trillion of hidden off-balance sheet dollar debt in FX swaps, the Bank for International Settlement says. And then it just tells you a little bit about what this is, what the whole thing is about. An example where a Dutch pension fund or Japanese insurer borrows dollars and lends euro or yen before later repaying them. And there's been a history of problems with this sort of transaction. It's a minor issue. It's a little blind spot over 80 trillion. The missing dollar debt from these swaps, forwards and currency swaps is huge. The Switzerland-based institution said. So this is the Bank of International Settlements. But I'm going to highlight again that we shouldn't be worried because this is just a little bit of a blind spot. If we have a look at Thomson Reuters Practical Law and encourage people to visit this really excellent website, it's got quite a lot of detail about the lead bank regulators. And of course, we see the Bank of England is leading there with the Prudential Regulation Authority and the Financial Conduct Authority that's putting out those minor fines on the banks. It gives the purposes of the Bank of England, ensuring monetary and financial stability and oversight of the system. And then it tells us about some other authorities. So we've got the Treasury here, the Payment System Regulator, Financial Ombudsman Service, Financial Services Compensation Scheme. And previously we had an input from the European Banking Authority. So probably it's the Treasury we should pay attention to. But of course, if we go back to the Bank of International Settlements itself, a few weeks, months ago, in fact, UK column highlighted that their innovation hub had come to London and given itself full diplomatic immunity. But here we've got a quote from their general manager, Augustine Carstens. The BIS, together with its partners, is taking a leading role in coordinating the work of the central banks on technical innovation. And of course, BIS working in partnership with the Bank of England, and everything that is conducted here is essentially digitizing a system which we can identify with major corruption problems. So I'm just going to suggest to our audience that what we've got here is the strange situation of a Swiss bank operating with diplomatic immunity, alongside the Bank of England. Both of these two banks are well aware of the depth of the corruption in the whole of the banking system, but nobody's talking about that. So my comment is that the Bank of England is complicit in both the secrecy and preservation of a banking system that the man on the Clapham omnibus, to use that expression, would regard as institutionally corrupt and unfit for purpose. And the key point of my report today is that alongside the banking corruption, we have those same banks working to control the gold price, which supposedly is helping to underpin the whole scheme. So we'll do more on this in due course.
Okay, let's move on. If you like what the UK Column does, you'd like to support us, please head over to community.ukcolumn.org. There are options to help us out there. You could pick something up at the UK Column shop, but please do share any material you find on the various platforms, especially ukcolumn.org and ukcolumnextracts.co.uk. Now, we just want to remind everybody that tomorrow on Glasgow Green at the Commonwealth Monument, that's 1 p.m. tomorrow, there is a peace rally for peace and freedom. David Scott will be speaking at that, David Close, Lauren Wilson, Alex Pearce, and Colin Buchanan. So do get along to that if you're in Glasgow.
Okay, thank you for that. And this